Hello traders and welcome to this live intraday strategy webinar. Today is Tuesday, July 18th. Good to be with you guys here this morning. We just got the release of import prices, or the import price index in the United States, broadly in line with expectations. You're not seeing too much volatility on that release so far. But we certainly do have a lot of setups to cover today. So Carlos, DJ, Mark, Pooja, Sarub, I got the whole crew in the house today. Bungani, good to see you guys here. So for the menu, obviously we'll start off with the DXY, which is finally approaching that key near-term support target near 94.50. Aussie just continues to rip higher. I didn't even get the pullback I was looking for. So the swing side of trades, we're still in that. From the intraday, still don't want to chase it from here per se with any fresh exposure, but we'll take a look at the Aussie crosses. Aussie Kiwi as well. Kiwi dollar made it right back into the highs. That thing hasn't broken down. Dollar yen and Kiwi yen from last night. Kiwi yen, just an update from last week's setup. Also, do want to take a quick look at Euro Aus, British pound, which I have coming into support right here, and then dollar CAD and crude. So any other questions or trade setups you guys want to review, as always, feel free to drop them on the message board. Gold and silver for Sarub. How could I forget? Sarub, gold and silver. Yeah, gold 1241. Remember we were talking about that level? We're there now. I think. Yeah, just shy of it. Okay, we just peaked just at right 1240. So watch that as we go through the webinar. I don't want you to miss it. I'm looking for some near-term resistance here. This stretch, you're still risking a rally towards this, but for now, my focus is on this region of resistance, former trendline support, very basic. So just keep that in mind. We'll come back to this, Saru, but immediately here, I think we're pressing some resistance. So gold and silver for Sarub. Okay. And as we go through, guys, feel free to stop me as always. So the DXY. Hey, D, great to see you. Good morning to you as well. So basic trendline support. You guys have all seen this chart before. Former resistance, support tagged here last year, was the yearly low, converges on a basic 786 of the entire advance. That gives you 94.47, just lower is the trend line. So key region of support, we've been talking about this for a while. This constituted a break of the weekly and monthly opening, the monthly open and the monthly opening range lows. So on this immediate approach, looking for support just a little bit lower into that 94.50 region. A basic slope line of the same gradient that we've been following from just these 2 points, extending off the low here. You can see it caught some stretch lows in late November. That converges here as well. Not really going to stress that one. Okay, that's a stretch, but still highlights that same key region. Today's close is going to be paramount from another standpoint as well. I'll be looking at the momentum signature. If you look at the momentum RSI profile here, this is the lowest read in RSI that we've gotten since the May lows of last year. So certainly as we head into this region, two things to keep into account. If we were to close the momentum signature below 30, that would constitute oversold conditions, not when you want to start fading, right? It means the market could really see another quick drop. The low day close from 2016 is down here at 93. It's really, nothing I have as a near-term target till then. Might want to just highlight the low day reversal close from back here in June. Okay, just as a soft target, that's 93.50, but it's really the 93 handle that's more important. So if we were to close the momentum signature below there, again, you could see accelerated losses for sure. If we hold at that point and price action intraday does tag 94.50, I'd be cautious of a near-term recovery, it's a near-term relief rally back towards the 95 handle, the former underbelly of this slope. So that's sort of where my thought process is on the DXY right now, sort of a bounce maybe off that region if we get it there, back to 95. If we close below this and momentum stays sub 30, you could see this thing, like I said, drop pretty hard. And this is something you'll continue to hear me say over and over again. When we see a downside break of a descending pattern or a descending slope, these can be the sharpest parts of the move. Likewise, and I think that's more evident here in Aussie Kiwi, when you see the topside break of a ascending move, typically that can also be, or oftentimes will be the sharpest part of the rally. So I don't want to start getting cute and trying to fade this or trying to call a low. We'll see how today's close pans out. Immediate focus is still for a drop into 94.50. Again, look for the momentum on the close of today's candle. Do you believe in oversold and overbought, says Bangani? Absolutely. I just don't believe in the common misconception of how people utilize that signal. Okay, so something can stay overbought for an indefinite time period. You can just look at price action. Again, don't take my word for anything. Price action speaks for itself. You know, throughout this whole period in November of last year, people were screaming, oh my God, dollar is in overbought territory. I got to short it. Well, if you had been doing that for this early mid-November stretch, you would have been getting slaughtered on this rally, right? It's the comeback below 70. It's the return from overbought condition. That's your signal that you're seeing exhaustion. Okay, and even then, on the rebound, if the top is in place, you want to see momentum hold 70, and that's exactly what happened on that subsequent high. So yeah, you can, use momentum effectively, but this whole, oh, we're an oversold, we have to start selling, buying, or we're an overbought, we have to start selling. That's a very loosely thrown around misconception, I think, Bangani. So quick note there on RSI. I hope that helps. The intraday chart for the DXY looks like this. Okay, so even within the confines of this nice, of the broader pattern we were looking at, you could see again slope support of this pitchfork. This is just off the highs that we made in June. Okay, specifically the June 9th and June 20th high has continued to guide price action very, very well. Again, some sliding parallels, catching some highs here. Another sliding parallel off the low, catching the lows, catching the lows. The break, saw it as resistance. We're going to continue to keep our focus lower, sub 95.20. Again, near-term target here at 94.50, 94.47. So no change there, okay? No change there. And here's another example, Bangani says, thanks. So you're more than welcome. I mean, it's a very common question. I'm sure other people in the room have it as well. And it's always good to review. But here's another example. This thing was in oversold territory from the 27th all the way till the 29th, right? Again, that's a 3-day stretch of people probably trying to fight this because it was in oversold territory. But as soon as you popped back from oversold, that's when you got the near-term recovery. Same thing here. Okay, we're still below 30 heading into the U.S. Open. You're at risk still. Bottom line, period. If you were to recover above 30 in momentum, then price action may see a little bit of a relief as well. One thing to keep in mind, I take all RSI, all oscillators with a grain of salt, right? It's there as an added help. We're always focused on price action. The oscillator is telling you what happened in previous price, not what's going to happen. So it's going to move in tandem. You have to keep that in mind. You're just looking for this to give you added conviction, a little bit more information on what's happening from the momentum standpoint. Okay, looking for support near 94.50. Long story short, questions on dollar index. Going once, going twice. That is number one. Number two, let's just jump right into the Aussie. Strongest performer so far today heading into the U.S. session, up better than 1.2% last time I checked. And here's the intraday chart. Let me start off in the daily chart. We were looking for a pullback towards 77.78 was the initial level of support I cited last night. And then this would have been the ideal re-entry for a long position, a pullback into 77.50, the top end of this key support zone. Obviously, the overnight decline fizzled out just ahead of that 77.78 level. You got the release of the RBA minutes, which is a lot of different interpretations of what that meant. Some publications are calling it more hawkish. I would say it's a stretch to call it hawkish, but they are starting to move up their. Let me take a step back. They're basically starting to prep the markets for an interest rate hike. Okay, they don't want to fall behind the curve. They seemed a little bit more upbeat on the economy, even noting that consumption, although household indebtedness remains at record highs, consumption on the consumer basis is starting to pick up. These are all things that would suggest, again, that they're looking to prep markets. Another thing is the 3.5% terminal limit, which they cited, which is what, like another 8 basis point hikes, or another 8 hikes of 25 basis points. So um, the shift, which no one was expecting really much of anything from, the 1.5 that they have now, that they're expecting 3.5. Yeah, a little bit more towards the hawkish tilt. Whatever. Okay. At the end of the day, it is what it is. We've been constructive, the Aussie. It fueled the next leg higher. Again, here's the topside break. Don't want to fight it. Always keeping in mind, topside break of an ascending formation tend to be runners. I noted that last night. Here's what the update looked like. So initial support right there at the November highs. We didn't quite get it. There's the intraday chart, I guess. Let me show you that. Well, let me do this. Sorry, guys. Let me do this first. Here's the daily. That's your bullish invalidation level, and then there's the 100% extension. So we've surged through that. If we close above it again today, you probably still have more upside to go. I'm going to have to rework the levels, guys. The only other level that I was looking at, I'm not sure why it disappeared, was this, and that is the January 2015 opening range low. It's like the 80.32 level. But there's a lot of upside here. I mean, look at the consolidation break that we've made. I'm just going to zoom this out so you can see the broader picture off the lows from 2016. Okay, this was a 2-point support touch, so I'm not really stressing that. This was a 4-point resistance touch, 1, 2, 3, 4. We talked about this yesterday. And the break, there's the rally. Now, it's going to take breaks. Karthik says, hello, everyone. So I'm just passing along the message. Hey, Karthik, great to see you in the room. It's going to take breaks, right? It's not going to be one straight shot into 81.50, but on a trade like this, you want to buy the pullbacks. So again, another thing to note, I'm going to keep drilling this in, Bangani, since you asked the question. We're well in overbought territory. This is the highest reading in RSI that we've seen, dating back, you got to go way back at this point. Dating back to 2013. Okay, and that's on your term. Well, that was within the confines of a descending or a downtrend, so you have to keep that in mind. But you did put in a near-term high there. So my point being is I'm a little bit more cautious. If you don't already have long exposure, not the point where you want to start looking for it, but where can we look for near-term support for reentry? Well, that's what the near-term charts come in for. So again, keeping in mind the broader picture of what happened. And we just cleared essentially the yearly opening range high. Here's your January open. Here's your first quarter high. You check it again into the close of the first quarter. Second quarter tries to check the low. You fail. Here's the failure again, and here's the breakthrough. So objectively, irrespective of what Mike Boutros or Jamie Setley or anyone else says, objectively, you've made a break of the yearly 2017 opening range. So you stay constructive above 77.35, 77.55. Near term, here's what it looks like. Here's your 240, just to give you some perspective. Okay. Whoops. Here's what it looked like yesterday. We're already at 79.17, which was the next topside target. And from here, like I said, you copy this over, 80.32, and then you'd start to look at these longer term fib levels, which I don't even have on the intraday chart, guys. This is off the 2016 lows, and that's 81.53. So the levels from here, and as they always will tend to be, guys, in near-term setups, okay, specifically the ones that I'll provide, when we start to get into territory like this, price action that we haven't seen in 2-3 years, you just want to be mindful that the targets are going to start to get stretched out from here because you're in breakout territory now. So there's no point in taking profit every 15, 20 pips. You want to open it up if you're holding longs. And look to see if you can get that larger stretch towards these upside targets. If you're not in any positioning from this point, again, areas of interest for re-entry is going to be pretty obvious. Your first area is going to be former slope resistance. So right here in blue, depending on where you are in time on a pullback, that would be the first area I'd start to look. And then the former highs, okay, from 2016 converge on the origin of the breakout, okay, which is also the weekly opening range highs. So 78.30 is going to be our immediate bullish invalidation as long as we stay above that, continue to favor the long side on this immediate rally in Aussie. Questions? Don't forget, tomorrow night you do get the release of Aussie employment data. That'd be the next major event risk on tap for this pair. Aussie dollar. We'll take a quick segue into Kiwi, okay, which also saw some strength in overnight trade. Unfortunately, that one's right back at the highs, so puts Aussie Kiwi in a very nice place, and certainly that's stretched into the final target at this point. So we'll go over that in a moment. But Aussie, let's go over Kiwi rather, number 3. Here's what Kiwi dollar looks like. So I left this on because I just want to show you how we use these near-term pitchforks even as ways to invalidate what we think may happen. So I presented this one, I think, last night. Show you what that looked like. Here's Kiwi on the daily chart. The basic premise is this same slope, the same gradient we've been following on the broader one off the yearly lows, would charge some sort of recovery. And the break below 2017 high day close, which is still the high day close, by the way, guys, despite this stretch, we still do have that preserved high from earlier in the year, first quarter. So that, the close of that reversal candle is still 73.01. And as long as we stay below 73.01, I actually still favor the short side. Now you got some CPI data that was pretty weak. It charged the break. It came right into what seemed like a near-term median line formation. It was the exact 618 retracement of the monthly range. So here's your July open. Here's the July low. Here's the July high. The 618 was right there as well. That's exactly what we highlighted as support last night. So on the rally, I actually wanted to see this thing hold below the 50 line, okay, below Friday's low. And that's also, again, the high day close for the year. So it would have been a really nice hold here at 73.01. It didn't happen. Price just shot right through, and now we're topping the upside of this pattern again. So I'm going to go ahead and drop this ML. We don't need it anymore. Doesn't seem like it's very effective. The retracement still stays in place as of now. That high is preserved. And look, I don't want to continually try to press a short on this. I do still think you get some sort of exhaustion high. And I know I've been saying that for a while. And every time we do get an exhaustion pullback, it's just super shallow. So don't sit there waiting for the full reversal. If anything, if you guys remember last week how we played it, we sat in this for a couple of weeks, actually. Unfortunately, from a standing point of near term, it was not very near term. But we just took some off. Eventually, the last tenth of the trade got taken out at break even. But that's how I would play this. I'm still looking for possible exhaustion while below that slope. So don't get too stubborn with it, but some of these trades you just kind of have to be patient with and wait out. There's no indication yet. The interesting part is that there's no indication yet that we're experiencing any sort of major breakout still. You saw Aussie top the weekly ranges. You saw a lot of the dollar crosses kind of move in tandem. But as far as Kiwi, still preserving that Friday high. So maybe another exhaustion stretch into the U.S. trade. I don't know. At the end of the day, if we clear that trend line to the upside, I don't want any part of it as far as trying to fade the move. Next topside target would be like 73.98. That's the high day reversal close, or actually just the reversal day close for September of last year. Questions on Kiwi? So it would kind of like match up well for some of these to stretch a little bit higher as the DXY, which is now testing 94.55, almost there. It kind of would make sense on a drop lower here. Euro stretches a little higher. Aussie maybe sees a little bit of a bump. But for Kiwi, I do want to see that top side capped by this trend line, if this interpretation is still correct. the end of the day, if we do break higher, let me take a step back. At the end of the day, if things were to end up basically where we are now, guys, we've posted a big outside day reversal. Now, like I always tell you, when these happen at support and it's an outside day reversal to the upside, that's the compelling case. This kind of outside day reversal actually is another case for exhaustion. It means the market tried to break down, we pushed into a new high. If we're not able to close or push through resistance, a lot of times that's kind of the last breath. So we'll see what Kiwi has in store for us as we get into the U.S. trade session if we do get a last exhaustion high towards that trend line. Okay, that's number 3. That puts Aussie Kiwi at an interesting juncture, okay, because obviously Aussie gains outpaced Kiwi gains. We've been following that for a while. Here's what Aussie Kiwi looks like on the setup. I took out the final target, like I said earlier, at 107.71. I'm more cautious here. You're working with basic slope resistance, nothing fancy, right off the yearly high, okay? And that converges on a key 618 retracement of the 2017 decline. Bangani says, please can you explain that outside day reversal concept again? So when you have, yeah, sure, I can take a minute to break it down for you. When you have an outside day reversal off of resistance, a lot of times that'll be a very compelling case for a market to reverse trend. Like here's an example. Okay. Well, I'm just trying to highlight it, but you get the picture. Here's an example, the high that we made in February, right? We made an outside day reversal off of the highs. What all an outside day means, Bangani, is that the candle encompasses the previous day's candle completely. Means that this day's price action completely engulfs the previous candle. We took out the highs and we took out the lows. It just so happens that's a reversal day, meaning the previous day was up, closed up on the day, next day we closed down on the day. So the combination of those, when it happens at a technical resistance or technical support, typically is very indicative of exhaustion. Not quite an outside day reversal because the previous day was a low, but you get another example here. And you see this happen, over and over again. Here's an outside day reversal at the highs, right? Next candle, this candle took out the previous candle's high and closed below the previous candle's low. You saw the price action continue to follow lower. Here's another one, right? Very indicative of exhaustion trades. So when you get one like this, it's a little bit different because you're getting an outside day reversal to the upside, but it's at the highs, it's at resistance. So a lot of times this can be an exhaustion trade as well. Okay, like one last hurrah. He says, okay, thanks. You're more than welcome, more than welcome. So for Aussie Key, that 107.70 region that we're testing right now, I'm just cautious of because of that confluence, the 618 retracement, like I said, and basic trendline resistance. Who was it here in the webinar? Someone was like, watch out, if these break, they tend to be runners, and that's absolutely true. The break of an upslope tends to be the sharpest part of the rally. That's exactly what we saw here. So the focus range to start the week, as we noted on Sunday, was here. There was the break. Again, that's the last target I want to chase on this stretch. You're still in overbought, so I don't want to try to short it because, again, markets can stay in overbought for an indefinite time period. But certainly heading to the U.S. trade session, the immediate upside's at risk, I think, around this region. If we take it deeper into a 120 minute, you can even see momentum starting to level off here. So you're getting divergence, albeit above 70, a weak signal, but certainly does highlight the risk for the possibility of a pullback in Aussie Key. Now, I have to say, I'm not really thrilled about the concept of of Kiwi strength rather, but broader Aussie weakness off of resistance may be the catalyst here to give the pullback. Questions? So no change to any of those levels. Again, feel free to take a snapshot of that if you need. That was Aussie Kiwi number 4. Number 5, dollar yen. It's a slow burner, but I'm still looking for that drop. Oh, well, everything happens during the webinar. Everything good always happens during the webinar. Well, I was looking for a drop, and we noted last night, we've been looking at this since last week, 1157 to 76. We're just grazing the top side of the support range. You're basically looking at a pretty big Fibonacci, moving average range that converges on the 50% retracement of this advance. So take it back to a daily chart. Here you're looking at the 100-day moving average, the 200-day moving average, and former swing highs from back here in June. Very nice pivot. It was the June opening range high. The break was the break of the monthly opening range. We did stretch into a new high. All of those levels converge right now around this region. So objectively, again, nice area. I'd start to look for profit taking, possibility for a little bit of a rebound, but at the end of the day, you did make a downside break of this ascending slope. The focus still remains lower while you're within this descending channel. So I feel dirty looking at it, but dollar yen price action actually looking pretty clean. Actually looking pretty clean. Again, 100-day moving average, 50% retracement, 200 gives you a nice pocket of support right here. At this point, as far as moving your bearish invalidation level, I mean, it would still have to be basically with the immediate focus, would still have to be bearish while below this channel. So that's going to be variable on where you are in time. Your probably best bet is just to work with the weekly open. All right, and that would give you basically a pocket right here. 112.45, let's call it. So that's what I'm looking at for dollar yen. If you're holding shorts, again, this is where I'd start to take a little bit off the table. If you're looking for a re-entry on the short side, you'd either need a rebound back towards the median line here or the channel resistance. That'd be your first area. You'd start to look for a hold of resistance. Or at the end of the day, if we were to break 1157, it's a pretty big pivot zone. I'll take you back to the daily chart. It's a pretty big pivot zone. Look back all the way to the initial opening range for the first quarter. Here's your February and March lows. Okay, or I guess February lows. And it's a big zone in price. So certainly if we were to break back below this, I'd be looking for resistance on a rally back towards. That might be your re-entry to try to push lower in dollar yen. Next downside target on such a scenario, by the way, you're basically looking at 111, 618 retracement of the advance. Any questions on dollar yen? Coming into the top end of the initial support range we've been looking for at 1157, 1179. So as far as that's concerned, by the way, from last night's update, no change to any of those levels. Okay, we're now testing the bottom end right here. And drop your resistance from 112.92 to that 112.45, the weekly open. All right, that's out of the way. Kiwi yen, I wanted to see this. I didn't highlight it in the update because I kind of wanted to see how we were going to open up the week. I did highlight Aussie yen because I thought you'd get a nice move here off 87.55 into 87.75. I was looking for re-entry there. Here's what Aussie yen looks like now. So you came right into that support pocket. It held, dribbled a little bit below, but it was a perfect entry. And this is the only one that actually worked out because the Aussie rally just ripped right into the 2017 high at 88.17. And then the top end here, we had highlighted that near 89, ended up maxing out just above the 89 handle. The high was 89.14. So for Aussie yen, at this point, I kind of just want to sit on the sidelines, okay? That was the last topside target I really wanted to mess with. Again, if you take a look at this from the intraday chart, this is both uptrend resistance on the broader structure we've been following for months now, and even on the near-term channel, the embedded channel that we've been following just off of the June lows, channel resistance, which already has 3 tags, is also in this region. I know we're trading above it right now, but markets aren't trading in a vacuum here. So I would just be mindful of chasing this from here. Again, if you're holding long exposure, a good area to start taking some profit. Re-entry, or where you'd look for support, look at this median line here. Resistance, 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 break saw acceleration, looking for support. Okay. Now, topside breach, if we were to break higher from here. Oh, by the way, this is the 2015 July low. Might as well copy that here. A topside breach, here's what the daily chart looks like in Aussie yen. If we were to break higher, there's really nothing until the highs, these swing highs. They're like 90.72, and then the key 618 retracement of the entire decline from that 2014 high right here, it gives you 91.22. So again, these are longer term targets, guys. I'm just sharing with you what would be the scenario if we were to see a break higher. But again, this is one of those trades where the opening for the year came into resistance and failed. We tried again. The pullback came into structural support, basic trendline support for the slope we've been working with from last year. That held. You got a false break here, but it held and recovered and defended it. And now we're breaking the yearly highs. So, you're bullish. You're bullish any way you look at it. Again, immediately you're at resistance. So I'm looking for an immediate pullback here, but you're basically still constructive well above that 87.50 barrier, basically today's low. Break below that and you'd start to look and move back towards the median line, but you get the picture. Any questions on Aussie Key? Real good stuff. Real good stuff. Watch this near-term resistance, initial support right back here at the 2017 open, former slope, or 2017 highs rather, former slope. Broader bullish inval would still have to be a move back below this region right here. And that would be the opening range low for the week, and that would shift a little bit the focus more towards the median line down here. Questions on Aussie Kiwi going, or Aussie Yen rather, going once, twice. So number 6, number 7. Let me just touch base real quick on Kiwi Yen. A similar scenario, okay? The daily chart, not so clean in Kiwi Yen. The thing that is cleaner is right here. This is what I've been focused on. And this is what we've been following over on the intraday charts, is this gradient, a little bit different from the slope that we're following on the daily chart with this broader pitchfork. So if you look at the intraday chart, there's your 2016 open as support, which was offering support basically since the start of the month. There's the dip into the median lines, and you saw a really strong reaction yesterday. So kind of want to take a little bit more of a neutral stance here. I think yen strength has a little bit more to go, and I didn't foresee this Kiwi strength. So the story of both, tale of two cities here, both have me on the sidelines. So gonna sit tight as far as Kiwi yen is concerned. If anything, like I said, the Aussie yen pullback I think would offer a better entry to get back on the long side. I want to see what Kiwi's going to do before I start messing with this setup. But watch this slope. It's continued to be very fruitful still. For Kiwi yen. Actually, give me 1 sec. Let me just see if there's anything to work with here. Too early. Okay. Resistance at the weekly opening range high. Support's going to still be with the parallel here. Watch for a break of that range. That is number 7. Number 8, real quick, Euro Aus. Here's what the Euro Aus trade looks like. So that's coming into an interesting support barrier, as you can see more appropriately on the daily chart. This is basic trendline support coming off the yearly lows, and there's the 100-day moving average, which actually caught the stretch low and overnight trade. Remember on this one, we aggressively, let me take a step back. A break below this basic slope aggressively turns the trade bearish. And we talked about this, this major slope of influence. You see these things come up on some of these broader charts. Aussie Kiwi certainly has one that we've been following for a few years off the 2014 January lows, but this is off the 2015, late 2015 lows. And you can see every play has seen a strong defense, or the break has seen a strong rally in defense. So here's the break, tried to break through it to the upside yesterday, it failed. Now the downside's checking near-term support. So another trade, which could be an exhaustion trade. So Bangani, another example of an outside reversal day, but this one is into support, right? If this was an outside reversal day to the upside, then it would be a nice indication that you're going to see a bounce. But an outside day reversal into the lows here, it doesn't really tell you anything. It could still be an exhaustion. It could be a push through and a close. You don't want to doubt it if we close below the trend line. And basically below 147.19, this thing is still at risk. Questions on Euro Aus? What do the intraday charts look like? Let me show you the 240 minute real quick. So this was bearish invalidation. I'm going to go ahead and leave bearish invalidation now with the weekly. Yeah, I'd put it with the weekly highs. Okay, break to the downside from here. You're still looking for 144.73, and the 50% retracement comes in at 144.26. Questions on Euro Aus? Okay. Pound, real quick on the update for the pound. I do have us at support. This is the monthly open, 130. It's right here. Also coincides with near-term slope support. So before everyone gets all bent out of shape on as far as sterling really turning around, we'll see if we can't find some support heading into the U.S. Open into this near-term region here. Broadly, I'm still working under the assertion that sterling is still within the confines of this uptrend. We're just at uptrend resistance. So are you going to get a kickback? Sure. But broadly, looks like this wave is still corrective. I want to stay with a broader uptrend bias in pound. But I am, if this is going to hold, price should really start to hold some support here into 129.80. Again, kind of matches pretty good with dollar index coming into our support zone, possibly pushing sterling a little bit higher, then turning around. Any implications if the outside day reversal is bearish or bullish off support or resistance? Yeah, so that's exactly what I'm saying, Bangani. The stronger one is going to be when you get an outside day reversal to the downside off resistance. Okay, so a bearish outside day reversal. And the strongest ones on the bullish side are when you're going to get an upside or a bullish outside day reversal off support. Those are going to be the ones that you actually want to, take a little bit more of an assertive move on. When you get a bullish outside day reversal into resistance, those play out, it does tell you that markets are definitely volatile and that we're looking for direction, but it doesn't give you the stronger indication that we tried again to make a new high and then we closed below yesterday's low. That's the one where like, okay, it's a blow off. He says, I get it now. Cool. Awesome. So that's the British pound. I don't want to spend too much time on it. The only thing I'm looking for the pound is if we hold here into the US Open, specifically into the London close. I do want to see that give us some support. Dollar CAD and crude, and then I'll jump into your questions. Here's dollar CAD. I just want to highlight the 126.13 target is finally hit. We were talking about that start off the week rather, excuse me. It's the 88.6 retracement. Remember, we also discussed it in yesterday's webinar, an interesting phenomenon on some of these commodity currencies. But also, I think Jamie tweeted this out also, guys. The median line of the structure we've been following off the highs. Okay, So that's coming in as, as a convergence area here as well. If we close below it, that should be resistance. And you look for the move into the next downside target, which isn't until 124.16. Okay, you might want to see a little bit of a swing low here, which could catch things for the low of the year. But that's 124.60. But it's really that 618 extension. It's the broader extension of the entire decline off of the highs from from last year. Okay. So big level here, in my humble opinion, for dollar CAD. You have crude inventories on tap tomorrow. As far as BOC, I don't really think you have too much on tap from Canada this week. Yeah, CPI data on the 21st, but that's it. And we are expecting softer CPI, so it could put a halt to some of this CAD strength you saw here. But at the end of the day, the focus for today, for my at least on my end, is going to be whether we're able to close below this median line or not. Again, another trade where you're well in oversold condition, not when you want to start fighting it per se, but something to recognize. Here's what the intraday charts look like. Again, it gets kind of messy down here. Can you please repeat sterling dollar? Karthik, do you have a specific question on sterling? I'm looking for support here into the London close. I want to see if we can hold above this slope you're seeing in blue. Okay, and more importantly, the monthly opens at 130. So I kind of want to see a hold above this region if this immediate approach is still in play. Okay, there's no surprise where we just came off of. Here's the daily chart, Karthik. It's the median line, basic median line resistance. So upslope resistance, and we're pushing lower. If this is going to hold the immediate advance here, you kind of want to see this monthly open hold. Now the problem is you're starting to see divergence on the near-term slopes and the daily chart. So it's putting risk of a bigger correction if we break back below the monthly open for it to go all the way down back to the median line. So that's my focus right now. I want to see if we can find some support. It's hard for me to get bearish the dollar here, okay? Because as we noted earlier, index is coming into what seems as near-term support near that 94.50 region. So I don't want to, get a new aggressive dollar short stance down here in the index, largely speaking, versus the dollar. We've already seen a big tumble. So that's my only concern. With trying to take an aggressive long stance from here. So we'll see if this holds into the U.S. trade session. If it does break lower and the dollar does recover, look for the median line here support to give us the next upside target, next re-entry. But for those of you holding longs, or if you're looking for fresh long exposure, you want to see price hold this region right here. Make sense? Says, yep. All right. So I would say, the monthly open 130. I wouldn't really stress the 50 line. If that were to give out, your last ditch effort would be somewhere around 129, depending on where you are, just below the 129 handle. Now you're more than welcome. Okay. Crude prices. Let's go over crude real quick. We got inventories on tap tomorrow, but right now, here's what it looks like. I do have us at resistance, 46.88 into 47. It's actually a level that we highlighted on the initial stretch here earlier in the month. We didn't quite get to it last week. It's not quite the weekly opening range high, but we did scrape the bottom of it in overnight trade. That's the 618 extension from the advance off the lows, and then the 50% retracement from the decline off the highs that we made for May. So pretty big region. If you look at it on the daily chart, it's also the 50 line for the current operative slope we've been working with. A decent slope, it caught the highs on a closed basis. It caught the lows on a closed basis. Pretty decent action along the median line. So, I don't want to chase this here. If you're holding longs, again, an area of which you start to take some off the table. On its face value, guys, the one good thing about crude is that it has a very clean weekly opening range just below resistance now. And the focus is going to be a break of 45.90 into 47. That's all that matters. today's range essentially. If you see a topside break, awesome. Next upside target in an area of which I'd be interested in more short exposure or fresh short exposure would be up here. But this is a breakout you could play on a move above 47. You have a whole $1.17 range to the 618, and again, some upslope resistance as well as the broader downslope resistance all converge in this pocket into 48.17. As far as the downside break of the weekly opening range, if that gives out, I wouldn't get too excited. I kind of stay neutral here. And if we were to clear the Friday low or last week's lows and this trend line support, which is just a basic slope off the same gradient, that would shift the focus more so down towards, the broader downtrend that we've been in off the yearly high. So look for a break of the initial weekly opening range, possible area of interest for short exposure on a breakout. If you break back below 45.19, that's really the level that needs to give out to put us back in a little bit more of a conviction short. Questions on crude prices? That's number 9, that's number 10. Crude is 11. Oh, guys, also in my notes here, I have the economic docket. We do have Carney on tap at 9:30. So right as we close the webinar here from the BOE, keep that a lookout if you're in any Sterling crosses. He will be on tap. Also, tomorrow we get the BOJ, the RBA. There's a speech as well from Alexandra Heath. And on Thursday, obviously the ECB and also some more RBA speeches will be on tap, so keep that in mind. Okay, coming right up, Karthik, you're also looking for gold. So is Sarub. Here's what gold looks like. So for gold prices, let's see if they capped out the 1240. We're there now. Awesome. So look, here's the deal with gold. I don't want any long exposure beyond this level from here per se. But I am looking for a reaction a little bit higher if we do trend, or if we do drift higher into the U.S. trade session. So there's a lot to look at here. First things first, monthly open, we're checking that as resistance right now as we speak. That was 1241. That was the whole premise of getting into 1241. Here's the basic slope or channel support twice, 3 times, 4 times saw acceleration. We saw resistance there yesterday. We're breaking through now. So it could be a little bit more of a pivot, but ultimately today's close will be very, very important. If we were to stretch into this region, guys, and then close below this trend line, that would suggest, again, near-term exhaustion. That would give us a little bit more of a near-term downside bias. But as it stands right now, we're searching for resistance. It's an uptrend, okay, off the lows of the month. This was a critical support barrier that we came into. We talked about this at length as we were turning in early July. So right now the focus is on either a stretch higher into this zone that gives like 1247, 1246. Initially, 1241, the monthly open is what I was looking for, and we're basically doing that right now. Here's what the intraday chart looks like. So again, there's that former trendline support, channel support. Looks like we're breaking through it. Next upside target's right here. 1250 would be a basic 50% retracement of the entire decline off those highs we made for the year. Nope, I'm lying. Nope, I'm not. The highs that we made back in June. And that converges really nice on upslope support. I want to see what this looks like. Doesn't seem like there's much lateral levels there that of interest yet, so don't work with that. But you get the picture. Looking for exhaustion into 1250, or even here, if we close below 1239 on a closed basis for the day, that might be your exhaustion high that we just made. I don't know, but I certainly am not looking for any fresh long dollar exposure, gold exposure from here. Karthik, does that make sense? Sarub, I know you're following this trade as well. Does that make sense? That's where I'd have your support and near-term bullish invalidation. I keep it at 1225. That swing high that we had made for the opening range for last week, but more importantly, that would necessitate a basic break back below the median line we just broke above this week and basic trendline support. It would necessitate a break below both of those. So that's what would turn me bearish. Also, that's an objective break below the weekly opening range lows. So that's at 1227. So nice zone there. That's what would invalidate the immediate upside bias. Other than that, I'm looking, like I said, for possible exhaustion into that region. Okay, that is gold. Making some moves. Making some moves. Bear with me one sec also. I just want to see if this extension yields anything. Ha! There's the 1618. There we go. Even better. Also, if this does turn around or you get a decent stretch halfway through and you get a signal, this is where you put your stop against. I don't really like doing that above fibs typically, but you know, an area of interest for me. What can be bearish invalidation point, Karthik? So in actuality, Karthik, if we were to cap this, technically speaking, that would be bearish invalidation. It's a basic break of structural resistance in that case. We know this slope has offered decent pivots, guys, right? In price. So if we were to break above this, what would validate it would be a pullback and test it as support. But certainly that in and of itself would shift the focus. And that would put you back at a target at 1261. Karthik, does that make sense? It's like an $11 gain if you were to cap 1250. But yeah, I'd want to stay below this if we're going to maintain a bearish bias for the broader picture here. Don't forget, guys. I mean, I keep bringing this up, and this is not necessarily intraday, but you know, when you look at the weekly chart for gold, it's still broadly, you know, yeah, we're within the confines of a near-term downtrend, but you know, I'm still working under the assumption that there's still broadly constructive price action here. You're just testing a major trendline resistance off the record highs. So that's why you start to run into some trouble on every one of these rallies here this year. Here's your record high in gold. All right. That is gold prices. Silver prices for Mr. Sarub also look like this. That's testing support or resistance rather immediately on a little bit more of an immediate front. So here's the former swing lows. Here's basic channel resistance. Here's a basic 38.2 retracement that gave us 1615 into 1620 something. The low here, 24. And that's what we're testing as resistance right now. We were talking about this yesterday. So, you know, in this instance, if you were to get a breakout off this level, yeah, everything stacks up into 1645, 1650. Not even. 1644, 1647. That would be two equal legs up off the low. That would be a basic 50% retracement in the entire decline from the highs that we made last month. That would be the first upside target on a breakout here. But you're basically checking resistance as we speak. Look at that. Even matches up with today's trade session if we do make a break higher. Near-term bullish invalidation I'd have at the yearly open on this one, Sarub, right around 1590, 1589. That's also would necessitate a break of the weekly opening range low. Make sense? A little bit more precarious on silver here. I still wouldn't necessarily still be interested in chasing this one either. So gold was number 12, silver was number 13, number 14. I really want to touch base real quick on euro pound. This is another one that we've been following. You might have seen me write about this on Daily FX the other day. Look, it definitely rebounded stronger than I thought. I was looking for the hold at 88.50 on this rebound if we were going to continue to stay lower. No, here we are drifting higher, 88, 85. You know, the risk still does exist in my humble opinion. I'm neutral here. This was a break of the weekly, or excuse me, the monthly opening range lows, it seemed, on Friday. We bounced higher. I saw that we were holding that median line, or that 50 line. Now we just broke back above that right here. So, you know, I still like the downside. The trade would have to trade back below the median line though to get excited about anything here on euro pound. I guess I'm still looking for exhaustion, guys. So we're looking for some more clarity on euro pound. And the other one I wanted to go over was I think someone here in the room was talking about pound Aussie yesterday, or was asking about it, about whether that was going to be, you know, a decent long position. And I guess I don't have to answer that question for you now, but the region that we were trading at yesterday in the webinar when we were talking about it was this 167.20 to 167.60 region. Big zone, and we talked about how big of a pivot zone this in fact was. So I just wanted to highlight that, you know, yesterday we closed right in that zone again. We couldn't clear it as resistance. Here's the downside break today, taking out the 618. The slope now, okay, comes in basically off these lows. Here and here. And if we bring up the next downside targets, okay, the reversal day close comes in with 786. And that's right around 163.15. So you're coming into structural support right here. Downside break, you still have a little bit more room to go. But I'd start to look for some near-term support here in sterling Oz. Again, the tell on this trade, if you see it close below structural support, momentum closes below 30, that is not something you want to fight. Such a scenario, you just want to look for that drop into 63.15. If this closes in this zone right here and the momentum is able to recover or close at or above 30, that's even more indication that you might be on the lookout for a little bit more of a rebound. So interesting price action here for pound Oz. And certainly since we've been following pound or been following the Aussie strength story, which is driving this obviously lower, it's going to be interesting to see if that continues or if the pound recovery is able to give this thing a little bit of a bounce off this zone. So a lot of sideline trades, unfortunately. I wish I was more involved in some of these sterling crosses, obviously some of the Aussie crosses, but I think there's still plenty of opportunity to go. Again, like I said, Aussie employment's on tap. Keep in mind for the sterling crosses, you have Carney, which will be right after the close of the session. And for Kiwi, we'll see if dairy prices, also released later today, can shake up some of those crosses as well. Any other questions before we wrap the session up? Again, a quick reminder, be back on board tomorrow morning, same time, same place. Jamie will have his midweek strategy webinar shortly after tomorrow as well. Hopefully we get a little more pickup in some more volatility on these. If you're not holding any exposure, guys, cherry pick your entries because we're getting some really nice swings, and don't try to fade any of these big stretch moves until we get a little bit more confirmation. For euro dollar, that thing is clearing some big levels here. Not anything I'm trying to really even try to get cute with yet. 2016 high comes in at 116.16. That's the next upside level. The broader trade still remains constructive well above 113.40. Quick Natgas, please. Sure. Here's what I haven't updated the chart, but let me see what it looks like. Okay, you're making it through the 200-day moving average there, and this actually constitutes a break of the monthly opening range in Natgas as well. So one thing you do want to keep in mind, again, objective price action. Here's your July open. July opening comes in at support, okay, right at the lower median line parallel. We checked the July opening range highs, that holds as resistance. We checked it again yesterday, it held. If we close above it, continues to keep the top side focus in play. Structurally, you could risk a rally towards there. From a retracement standpoint, it's also your 618. And from an extension standpoint of the advance, if you want to take that into account, 100% gives you 1314. So here's a big pocket of resistance. You'd want to keep an eye out, Karthik, for this advance. Okay. So we'll continue to track that. All right, guys, wrap it up here. I'll see you all tomorrow morning. Best of luck trading, and I'll see you then. Cheers.